Hello good people, it's me Ma1, your money manager. Today I'm taking you through how I've raised money for Ma1 blog. Remember, I'm on my pursuit to financial freedom and I'm using my property investment as my vehicle for achieving my financial freedom. Remember, we've been busy building our 6th block. This is a block of 3 studio apartments. So I'm going to share with you how I raised money for this block. First things first, total construction cost for this block came in at a total of 231,000. I'm rounding the figure off, and you might be wondering, where did you get the 231,000 from? That's exactly what I'm sharing with you today in this video, so pay attention. 3 sources of funding that I use to finance my current project. Number 1 is my business income. As you might know, I am running a business. Money Managers is now a fully fledged business with product and services that I'm offering. Under the services, I'm offering coaching, I'm offering training, I'm offering financial education training in the form of financial education, and I also do offer financial talks. I find myself currently doing speaking engagements, and that's where I'm also generating money. And I also do have products that I'm selling under Money Managers. One of the products that I created is this one here, Money Managers Diary, which is going at 350. I also do have what we call Money Managers Wallet here, going at 299. So these are the products that I'm selling under Money Managers. Money Managers has been the primary source of capital for this block that I'm building. Total construction cost for this block came in at 231,000. I'm rounding off the figure. Yeah, 231,000, so much more than I expected. Inflation really escalated the figures. You can see it, you can feel inflation everywhere that you're going. And the fact that I'm building in Ma1, you know, cement is very expensive in Ma1. Building bricks are also very expensive in Ma1 because of cement, and also because of river sand, which they take outside Ma1. So in Ma1 there's no river sand. They either take it from Mosetse or they take it from Francistown, and that is really what is pushing the cost of building blocks, so you can understand. So total construction cost came in at 231,000, and out of that 231,000, Money Managers injected 155,000 into the project. Woo! Money Managers. So that is 67% of the total cost. That money came from Money Managers. So I'm really happy with the progress that I'm seeing from this business. So how do I do things, and how do I really determine how Money Managers is financing the project? So I've sort of set my own business rules. So primarily I am an investor. I'm a property investor. That's what I would like to call myself. So I've set this business rules for myself that, you know what, every income that I'm going to generate from Money Managers, 50% of that money, non-negotiable, it goes toward my property development. So if I sell this diary to you today, which is going at 350, 175 pula of that money is going towards my property development. So that's just how I do it. It's non-negotiable. It's now a habit. I'm not even thinking about it. I'm just moving the money as it comes. So Money Managers provided us with 155,000. So where did I get the balance? Other 2 sources of funding that I've used. The second one is stock liquidation. So with stock liquidation, what do I mean? Liquidation, or liquidating your asset, is when you turn the asset that you hold into cash. So when you convert it back to cash, we call it liquidation in the financial world. So I liquidated some of my stocks. I sold the shares and I got 39,000 pula, and this is the money that I channeled towards the current development. How did I come to that decision, you might be asking yourself? So I had to look at both the projects. I had to look at my current project, the block that I'm building, versus the stocks that I'm holding, and I had to look at the returns, compare the returns. Where am I getting better returns? So I realized I'm getting better returns from my property investment compared to my stocks. So I liquidated with the understanding that the quicker I can invest and finish this product, I'm gonna recover this money quickly, and I'll be able to buy back the shares or to replace those shares that I have sold. So really, this is sort of like a temporary intervention that I had to put in place for me to complete my project. That was the second source of my capital. This accounted for 17% of the money. So out of the 231,000 construction cost, 17% of that money came from my stock liquidation. And remember, the figure I said is 39,000. So the third source of capital for my project was private financing. Underline that, private financing. With private financing, I am not referring to micro lenders. Private financing, I'm referring to individuals just like you and me. It could be your colleagues, your friends, your family, who always have got this excess income, excess money that they're looking to invest, and they're looking for better returns than they would get from your conventional savings and your conventional investing with the bank. So there's always money there in the market. There's always this one person with excess income that is looking for a better place. So I was fortunate enough to find this one sister who's really been supportive. We are not related, we're not even family, but she just so much believes in me. She believes in what I'm doing, and she was able to put in 25,000 of her money into my project. And I'm just looking, we're in discussion right now to raise about another 12,000 for me to fully complete the project. That will take the total of my private financing money to 37,000, and that will account to 16% of the total construction cost. So these are the three main sources of raising capital that I have used for this project. So somebody would be asking me, but why are you not looking for conventional way of raising money? I have said that this is my financial security project, so I'm not looking to tie it for a very long period of time. This is why banks are really outside scope of what I'm doing. I would rather go and raise money in the market from private investors. And the thing with private investors is it's done behind closed doors. You cannot go out there doing it or advertising it, because the moment you do that, it's going to be deemed as collective investment undertaking. And if it's a collective investment undertaking, it has to be regulated by NBFIRA. But private financing is something that has been existing for the longest time. Most of the rich people that are really using this to raise money, they're doing deals behind closed doors. I'm just sharing this with you to try to sort of expand your horizon, and just try to show you that, the moment you become a property investor, you need to start thinking creatively, thinking of creative ways of raising money for your project. So you can see 231,000 is what we spent on this block, and I already have tenants that are ready to move in. I'm just left with one thing that I'll be finishing hopefully next week. The block will be totally closed, and we'll start thinking about the next block, which is going to be our 7th block. This is all that I wanted to share with you today. I hope you find this very insightful, and please don't forget to leave a comment for me, leave a like for me. Thank you very much for watching. I will see you in another video.